You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is time once again for a little show we like to call around these parts the options block. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of unusual activity, a whole bunch of your questions, stir them all together. You got the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get at us on this program every Monday and Thursday, noon Central, 1 p.m. Eastern on the old Mixlers or wherever the heck you like to download your podcast after the fact. We don't judge. Just check it out. And, of course, make sure, however you listen, send in your questions, your comments, your insights, your pearls of wisdom. We do indeed enjoy hearing from you guys. And joining me on the old program today, let's see who we got. Let's go out to the Fidelity hot seat first, because he hasn't been on with us in a while. We are joined once again by Mr. Colin Songer from the Active Trader Strategy Desk over there. Colin, welcome back to the show. It's been a while. You remember how to do this, sir?
I'm a little rusty, but I'll get back into the swing of things. It's definitely been a while, but thanks for having me back on.
Well, we're happy to do it. Sounds like everyone over there is taking serious vacation in Fidelity Land, so it's an active rotation of you guys fighting your way back onto the hot seat. And also joining us from a little bit closer to home, though we never know quite where he is. He could be in the Option Pit / Carmen Line World headquarters. He could be out in scenic and sunny Riverside, the town that, as he terms it, has just changed all of human life as we know it. Or indeed, he could be at a Costco near you. Let's find out. He's the Greasy Meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the show. And where are you today, sir?
I am watching the rain pour down from the 30th floor of our offices on LaSalle Street. And boy, what a cruddy day it is. It's the only thing gloomier than the weather outside is the lack of volatility in the market.
That sounds about right. I wish I could see the weather, but I'm, of course, deep in the bowels of the studio here, where they don't permit such things as windows. That would be frivolous. It defeats the sound. So no, I'm deep in the bowels. It could be thunderstorms, could be frozen, could be who knows what the heck's going on out there. We have no idea, because we're here, committed to making the audio for you listeners. And last but not least, let's see how committed he is. Let's find out. He is the one and only Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here, and sun's starting to come out here in St. Charles, so maybe you guys are going to get some better weather in the next hour or so.
I expect nothing less because, once the bad weather comes, they just turn on the weather shield in St. Charles, and everything is right with the world again. Let's see if everything's right with the market as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the block of trading that is the Trading Block. And coming into today's show, as Mr. Meatball alluded to, the markets, or I should say the weather, it's kind of garbage. The markets, can't really call them garbage. A bit of red on the screen, but not exactly a bloodletting out there. The Dow and the NASDAQ kind of fighting for number one place to the downside, fighting off between 0.3 and about 1/3 of a percentage point. But again, not a huge wipeout. We're seeing the S&P kind of the laggard down around 0.1 of a percentage point or so. Gold taking a bit of a lift up about 1/3 of a point. So again, 1/3 is the magical number there today. And crude actually taking it off a little bit, back down to the mid 50 handle, which is interesting, 55. Surprising given all the news coming out of there. Of course, if you like crude, stay tuned. After the option block for TWIFA, we'll be joined by Eric Norland, a senior researcher over there, senior economist over there at CME. He's got a lot of great research. Do oil skew? Does it really matter? And all that kind of good stuff. We'll get into all of that in a little bit. Of course, and coming into today's show, of course, we're seeing VIX was getting a little bit of a lift, VIX cash. It's still up a bit, but not a ton. Let's see. It was at about 14.25 right before showtime. At about a 14 handle right about now. So it's up a little over a handle from where we were this time last show. Our old friend VVIX also up a little bit, up around 87 or so. So up slightly, fraction of a point, but pretty much close to where it was this time last show as well. And our old friend VXX. Getting a little bit, all three vol products getting a little bit of a lift, but not a ton, up to about 23.5. Getting back some of that precious, juicy erosion that you guys love so much. So we're resetting that erosion clock so you guys can be super excited. Speaking of super excited, he's always excited when he's on the show. So let's go to him first. Uncle Mike, sir, our permabull, our Apple devotee, our silver collar guru extraordinaire. What is catching your eye out there in today's market, sir?
Well, I think the big thing that's catching my eye, at least from what I watch, is this shiny silvery thing. Silver. Silver's been rallying quite a bit the last week or so, and today it's at least looking at SLV. It made a run at the highs of the year. Still didn't quite touch them, but silver is one that it's interesting. The way I like to describe silver, it'll bore you to death, but it'll kind of just come out of nowhere like a thief in the night a lot of times, and that's kind of what it's been doing the last week. So definitely have silver on the radar, seeing that go up. I think today's going to be a pretty interesting close just because of the fact that we're knocking on the door of the high of the year, and with that happening, it'll be interesting to see if we can break it, make a run at it, or close above it. So that's definitely something that's going to be on my radar for the rest of the day today. Apple, of course, above the 200 mark again. And then with the Dow is down, not a huge amount, but is down a little bit. S&P is roughly flat. Had a little bit more of a downturn earlier in the day, but it's bounced back from that. Overall, that's what's on my radar at this point. And this is going to sound kind of weird, Mark, but if we get a little bit more movement in silver, I actually looked at doing a move in silver today. I almost did it, but it's still not quite enough for me to do something. But I may do a move in silver if we keep going higher next week. We'll see. I don't know, but I might have some silver action for you next week. The biggest letdown of all time is the silver action I thought was going to happen.
Fingers crossed. Never have I been promised so much and delivered so little on a trade before, sir. But fingers crossed, not quite thiefy in the nighty enough yet for Uncle Mike listeners, but stay tuned. Maybe silver will hit those much vaunted, much ballyhooed levels, and we'll get some action. Maybe a roll, maybe an adjustment. Who knows? Stay tuned. Stay glued to the old radio dial to find out. Let's go back to the land of the old hot seat Colin, it's a somewhat quiet, slightly downside day over here on the old street. What are the Fidelity folks, the Fidelity masses, what are they up to today, sir?
Yeah, so when we jump onto the website, going to our stock research page, take a look at the orders by customers. Some of these are very familiar names, but interesting enough, top in the list, I was not surprised, obviously, is Netflix. Dealing with the earnings announcement, the subscriber miss. They're down 11% on the day from that announcement. So that's really kind of leading the way to about 322.62. So still down about that 11%. Interesting enough, it's below all its moving averages now. That 20, that 50, and 200 represent short-term, intermediate, and long-term. So it actually hasn't really been around this level since January of this year. Interesting enough, when you take a look at the call-to-put ratio for volume, it's 1.29 to 1 versus a 90-day average of the call-to-put ratio being 1.37 to 1. So just slightly under that mark. Amazon taking up that second spot. Now, with Amazon coming down the line, right now it's still above all its moving averages, down about 1.5% to 1960.97. And this is just after it recently created a new 52-week high on July 11th. So the volume call-to-put ratio stand at 1.25 to 1 versus its 90-day average of 1.31 to 1. So just slightly under that mark. AMD seems to be a common name that keeps popping up here, and it will continue to do so. This is after an analyst downgrade. They're citing September quarterly shipments tracking down. Right now, AMD is down about 2.5% to 32.77. So it's above all its moving averages, and it created a new 52-week high just 2 trading sessions ago. Now, the volume for the call-to-put ratio stand at 2.09 to 1 versus a 90-day average of 1.73 to 1. So it is just above that mark there. But I do have a curveball for everyone because we always got to have at least one. And I know everyone's heard this, which is Co-Diagnostics Incorporated. That's right, CODX. Everyone, I'm sure, is following that.
My favorite. I have it on my watch list right now, sir.
There you go. So they've come through showing some favorable results of a study for their co-primers, which provide high-performance detection of cancer mutations in liquid biopsy samples. So it's actually popped above its 200-day moving average, but it sold back off below it. The interesting part about this is that it closed below $1 per share yesterday, and is up 39% to $1.34 per share, which is actually closer to 50%. So last one taken in is Microsoft. Now, Microsoft is releasing earnings after the market closed here today. It's right now down 0.9% to 135.05. It's currently below its 20-day moving average, but it's above its 50 and 200. And it just created a 52-week high 3 sessions ago. Now, the call-to-put ratio on this is 1.17 to 1 compared to its 90-day average of 1.78 to 1. So it's much lower than its average, which I found to be interesting. So it'll be interesting to see how that plays out because we have that earnings release coming out today. And that's what the Fidelity customers are trading today.
A little bit of something for everyone there. A little bit of the old Widowmaker getting itself its wings clipped a little bit. I think people have been waiting for that type of announcement out of Netflix for a while. They've been managing to buck the expectations and continuing to grow subscribers in the face of growing competition, things like the forthcoming Disney platform and everything else. It's more expensive. They're losing a lot of their deals they used to have as a result. So it's getting more expensive. People are bidding up the cost of content, and there's new competitors on the horizon. Not usually a bullish chart. Netflix has managed to buck that trend until this past announcement when they pretty much posted one of their first subscriber losses in some time, if not ever. I'll have to go check the check the numbers to make sure on that. But as you know, it's been quite some time that they haven't reported that, so people are sticking their hooks into Netflix as a result here today. Coming off, it's about 40 handles, or about 11%, 322.90, a little bit of the way into showtime here. Speaking of which, not surprisingly, it is kind of dominating our tape here today. Let's do a quick rundown of what's lighting up the markets, and we'll get to the greasiest of meatballs here. Number 10, Facebook. Facebook taking a bit of a drubbing on the hill this week. I believe one of the a congressman compared their forthcoming cryptocurrency to Al-Qaeda using airplanes to crash into the Twin Towers. I'm not sure how they make that mental leap, but either way, not exactly a good PR week for them. Facebook on number 10, 115,000 contracts on the tape. Number 9, good old Beamer, IBM back on the radar, 117,000. Number 8, Baba, $1.24 on the tape. Number 7, NVIDIA, the former crypto canary in the coal mine. Now, your guess is as good as mine. $1.35 though on the tape today. Number 6, Amazon, $1.64. Number 5, GE, 177,000 contracts. Number 4, good old Softy, the aforementioned Softy, the only $1 trillion name left, or at least coming up to report earnings, coming up to soon, with 217,000 contracts on the tape. Numero tres here, Apple, 219, a rare drop out of the number 1 spot. Number 2, AMD. AMD's been lurking in this top 3. It's not number 1 recently. It's been lighting up the tape of late. 253,000 contracts. Number 1, you guessed it, Netflix, about 450 on the tape coming in today. Let's see, the most biased paper we got here in our top 10. Looks like it's a pretty close horse race between Facebook and AMD with 68 and 69% of their paper. Coming on the call side there. Interesting stuff. Really quickly, let's look at the broad markets as well. VIX, about a little shy of 250,000 contracts on the tape. ADV 441. SPY, a little bit shy of 1 million contracts. Again, this was coming into showtime. ADV about 2.25. SPX, a little bit shy of 500,000 contracts on the tape. ADV about 1.25 million. The Qs, about 250,000 contracts on the tape as well. ADV 582, and the Russell, aka IWM, $1.20 on the tape. 304,000 is the old ADV. All this a long way around to getting back to the meatball. Sir, what's lighting up your radar today on this relatively volatile? It's got a little bit of vol coming back in, but relatively vol-free day, sir.
Yeah, but the only vol that we have out there is in silver, where VXS SLV is actually at a 52-week high. So as we're hitting the 52-week high for, getting near that 52-week high for silver, vol is through the roof, and it's all related to the two calls. There's when you see underlyings popping and the vol popping, so, just to put things in perspective, vol's up in 3 days about 7 points, so call it 50%. Yes, I'm going to say 50% in a matter of 3 days, which is pretty impressive.
Wait, did you just quote percent of percent to me, sir?
I just did.
You're the last of the Mohegans.
I did that for you.
Dying on that hill, sir, and you did it to me. Oh, interesting. I'll mark this on my calendar today.
I know how much you love that. But really, it's up about 7 points. And so, that's been kind of an interesting one. Amazon getting kind of punched. Netflix has some problems. I think they finally figured out a price point where people say, it's not worth it, especially with them losing content. I think their pricing proposition, when they have all the Disney content and NBC content and everything, is really worth it. But with everything stripped out, The Office, all Marvel, Star Trek, Parks and Recreation, Friends. I don't know if they have Friends or not. Things like that. Am I going to keep my Netflix subscription for Stranger Things and Fuller House? The answer for me is no. Now, some people really like it, and they'll continue to be subscribers, but I think that they've developed a platform that is going to be less appealing to guys that go after kind of traditional, like, bro type stuff like Marvel Universe and Star Trek, or Star Trek, Star Wars, and that could present a real problem because bros are mostly just sitting at home watching movies on Netflix. They're on their Tinder app, broing out. They're having their beers. They're puffing on a Juul, and broing out on Netflix, waiting to see if anybody swipes right. And by the way, rarely do they ever swipe right. But that they're in danger of losing that client, and I think that's what Netflix a real problem is.
Losing the bro market, the much coveted. You hear the 18,
everyone wants the bro market.
You hear the 18 to 35 market. You hear the boomers. You hear the millennials. You never hear the bro market quoted too often. I think that's a lost bit of data out there. I think maybe you could lead the charge in that regard. Maybe become a demographer for the bro market. What do you think, Mr. Sebastian?
Yeah, I mean the bro market is the biggest market out there for like stuff that bros like, which is action movies and I don't know what else do bros like. I'm asking my intern. He's like a quasi bro.
I was just like Wrigley yesterday. I was in the heart of the bro market up there.
Oh, really? You're in the heart of the bro market?
On National Hot Dog Day, a good day to be up there. I figured you'd be all over Netflix, though, for Stranger Things. It's nothing but one giant 80s reference.
I do like Stranger Things. That's like the one show I am still really watching on that. But, how many more good seasons? And I do love it with all the 80s references and everything, all the video games. Dig Dug. Who doesn't love Dig Dug? But I'm not sure that's going to be enough to hold all the – I'm an old bro, not a young bro. So that could be –
coveted.
Maybe that'll help with the old bros, but
coveted
not the young
bros. Bro market. But you're right. It is kind of fast. Some of this data coming out on Netflix, there's a reason why they spent all that stupid money on Friends last year. It's because people spend all this money for Netflix, and all they watch is Friends. You could watch Friends 8 million
Friends
other ways.
Parks and Recreation.
And The Office. The Office is the other one they all watch.
And they're losing 2 out of 3 of those.
Yeah, so I mean, it's kind of like funny. People go to Taste of Chicago here, the world's biggest food festival, and they eat pizza and things they could eat anywhere else in the world. They don't taste new things. People pay for Netflix and they watch Friends and The Office, things they could watch many other ways and probably have already seen. But c'est la vie. That's what people are into. Let's see what we're into from an earnings perspective here. Remember, you got a hot new report hitting the website, theoptionsinsider.com, from our friends over there at ORATS, pretty much right after the showtime, a little bit after, so it'll be hot off the presses soon. You're getting a little bit of a free early glimpse here if you're listening to the show live, so a little bit of a benefit for you live listeners. A bunch on this report going hit the site really soon here, including, let's see who we got here. We've got some names you may have actually heard of, like Amazon. They're reporting next week. They're just a tick under 2,000 coming into this report time. They're pricing in about a 6% move. Past moves have averaged about 4%, so a little bit rich maybe compared to past move. Tesla on the 24th, they're about 255. Man, look at that 200 handle well in the rearview mirror for them. They're pricing in nearly 10%, 9.5%. Past moves have averaged about 6%. They've kind of truncated and kind of broken down these earnings move reports a little bit to make them even easier for you guys to analyze. So look forward to that. Facebook pricing in, they're at about 202 coming into the report time, pricing in about a 7%. And they've averaged about a 5.5%. So it looks like a little bit of a theme here is that maybe a little bit of some richness to the straddles. Alphabet and the Google, both pricing about a 4.5%, and they both average about 3.3%. So a little bit rich there as well. Intel, about $50 coming into report time, 6.1%, and they've averaged about a 5%. Let's see, good old S-Bucks. Let's see. S-Bucks next week as well, 90.25 as of press time, about 5% on the straddle. They've averaged 3.3%. And we were just talking Softy earlier. They're after the bell today. Softy, $1.37 as of their time of this report here. They were pricing in 5.3%. They've averaged 2.9%, so pretty rich. Not quite a doubling, but pretty close there for what this is kind of what we've been saying of late. It's interesting to watch. And Microsoft did outperform not too long ago, and pretty dramatically, about a 3x to 4x their straddle. Then they've kind of been quiet ever since. Maybe some of that's still baked into this straddle price. Either way, interesting stuff here. You can break it all down for yourself. There are dozens, if not hundreds, of tickers here available for you guys to sink your teeth into over there at the brand spanking new theoptionsinsider.com. Meanwhile, though, we got to keep on rolling. It's time to get a little odd, a little bit weird, a little bit wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
right, let's kick things off with a recap, actually, of a trade we just kind of profiled a week ago, but it was a weekly trade. We want to check it out. This is a bit of a funky one. Mr. Meatball, I'm sure you've probably seen these things. There's one not that far from you. I'm talking about Carvana. Have you seen these giant car vending machines? There's one out west there in the Lombard, kind of Downers Grove area, not that far from you. Have you seen one of these things? Oh, Mr. Meatball is pulling a Rock Lobster impersonation and has muted himself. So we will dig him back up. And Bob, I think the Rock Lobster, as I referred to, he missed it. He had not seen one. Of course, he's up in Maine, so I don't think they have a lot in the way of Carvana car vending machines here on the show. Are you there now, Mr. Meatball?
I am.
All right.
I had to go. I was eating an Italian sub sandwich, and with some nice, delicious jardiniere on it. And then I made the mistake of touching my eyes, so I had to go wash my hands and wash my eyes.
Well, there you go. There you go. First rule of radio: don't touch your eye after eating hot peppers. That's just the first rule.
Mistake myself.
Yeah, that's a first rule for life. Sounds like Colin has done that one as well. Have you seen one of these crazy Carvana auto vending machines?
You know what? I have seen them. They're pretty unique. Really, just kind of a fascinating way of buying a car. I don't know if it's gonna work long term, but it's definitely unique.
Well, it seems like our option paper was kind of along that same tip as well, not exactly feeling the love. Last week, listeners, exactly a week ago on the 11th, we profiled here on the show Carvana, of course, ticker symbol CVNA, trading today, 59.34. Remember that level. It's going to come into play in a little bit. But we profiled last week. This is the name that's kind of been all over the place. They are, of course, the aforementioned. If you haven't seen one of these, they're kind of crazy, listeners. They're about, maybe 4 or 5 story tall glass towers, effectively, that can hold. They probably have, each floor can probably hold 5 or 6 cars around, and they go up. So it's probably like 30 or 40 cars in this thing, not that many. And maybe there's more in a lot nearby, but that's some in the vending machine. Then you go, you do your negotiation, you buy a car, they give you a giant oversized novelty token, you put it in the machine, you pull the lever, and your car comes down the vending machine. It sounds like something out of a fairy tale or a sci-fi novel, but it's real. And it's interesting, and it makes me want to go buy a used car just to see this machine in action. But, of course, it has not all been smiles here. A year ago, they were trading about 45.5, so a bit shy of where they are right now. They got up to about 67, and then they sold off again. Back that was in September, and then they sold off again to about 32, 31 and change back in February. Then rallied again all the way up to about 75. That's pretty much close to their 52-week high. 76.85 is their actual 52-week high. Then they kind of been selling off again and kind of vacillating in around this 60s, mid-60s range, and now breaking through the 60 handle to the downside. And that is worthy of note because a week ago we came on here and profiled someone loving themselves some puts to the tune of the July 60 puts. So these are going out pretty much tomorrow. So at the time this went up, this only had a week. So this was a weekly trade, listeners. 5,000 of the July 60 puts going up for 45 cents. These things were 30 cents at 45 when the trade went up. And this was opening over there on the Amex. So someone gobbling up that offer 5,000 times. And looks like they were pretty happy and pretty well timed as a result here. The stock off over 10% now since that trade went up. It was trading not quite 68, like 67, 66 and change at the time that this trade went up. Actually, it was 66 and a quarter when this trade went up. And go figure, these puts looking pretty good right now. They were still open as of this morning. Let me pull up let's do a quick little scan here. Let's invoke our friend, the Flow Master. Let's see if his trade alert system can alert us of any good trades out here. And for size out here, oh, yeah, the July 60 puts are trading today. Go figure. But coming into this morning, they were still open to the tune of about 8,000 with about a day and change to go. They were trading for about $1 this morning. They're trading for $1. They traded 708 times for $1.55. Go figure on the bid. It looks like someone trying to take a few of these bad boys off the tape here. Looks like a decent number have traded so far today. Let's see how many total. Total of that trade is 500, but I think there's more. It looks like about 1,200 have traded so far today, and these are still open. Yeah, worth noting, after we profiled this trade last week, 6,300 total went up on the day, and 1,600 went up a couple days later, 16th, actually a couple days ago. So these things have still been trading. So the open interest got up to about 8,000 on these bad boys. Someone was really liking themselves this 60 strike, And it worked out. 45 cents up to roughly $1.50 or so right now on these bad boys. And they are still open in the stock, obviously, through that 60 line right now, down to about 59.20 off $1.80 today alone. So, Mr. Meatball, this appears to be some very short-term, very well-timed paper. What say you on these? I guess someone not liking the auto vending machine, sir.
I guess not, but it really pretty well timed. Nice little dip over a couple of day period, and it just shows you how, when you do some analysis and realize that, maybe the stock might drop, that you can make a lot of money fast. Plus, the vol went way up.
Yeah, that was kind of fascinating thing to me, too, was the vol kind of maintained persistence and then shot up, which is interesting. Mm-hmm. So that he had a double whammy working in his favor. Because these puts should have come in a little bit, and just from erosion, and they really didn't a lot just because of, A, it moved in his favor, and B, the vol helping to undo a lot of that erosion. So he had a nice little double whammy here, which is unusual. Usually you'll see these puts eroding, but the stock moves, and he'll still make money on them, particularly with today's move because we're through the 60 handle. But that erosion will take a lot of the joy out of it. But not seeing that. These ones have maintained pretty firm. So this was a fairly interesting, fairly well-timed trade. Seems like some of them are coming off today. We'll see if our friend keeps the love alive, or maybe he wants to get short the 60 strike. We shall see. Maybe he was a size underlying holder and he's out at 60. So we shall see. Either way, these bad boys still open, even though some trading today, not all of them, not by a long shot. Looks like about maybe 10% of the OI so far has changed hands. We'll keep an eye on this bad boy, though, and see if he is done or if there's more to go. Carvana, car vending machines, not exactly feeling the love today. Let's see if our next one can feel the love. Oh, this is this one in a while. This is Skechers. Skechers, they of the formerly ladies sneakers, now kind of everybody's sneakers and shoes manufacturers here. And let's see, a year ago, that's trading today, of course, SKX, ticker symbol, trading right about $35, up about 40 cents, so decent day for them, a little over 1%. A year ago, they were trading 32 and change, and then they sold off exactly the next day, so obviously probably around some earnings. Earnings are today, actually, yeah, so this is their earnings time. And they sold off last week after their earnings down to 33, and they kind of stayed in that range for a while, and then they got down up to 30 again in November, and then back down to 26, and then by Christmas Eve, they hit their nadir of around 21.5, so not looking good for them. Then like the rest of the market, they kind of just turned around in a rush, including, it looks like in their earnings in February, they gapped up from 27.5 up to about 32.5, so a good little run for them. And they kind of stayed up in that low 30s range for a while, and then they kind of sold off again back in May down to about 27.5, and they kind of been doing this 27.5 to about 34.5 dance for little while now, and they're back up on the upper end of that swing, up to about a little north of 34.5, 34.82 right now. So let's see what we saw here. They have earnings after the bell. Oh yeah, more July papers. So this is going out tomorrow. So this is a straight up earnings play, listeners. So pay attention to this one because it's only got a day or so. It's not like when we got 2-year puts or anything. We'll know right away if this guy was right or if he was wrong. We got the Skechers July 30.5 puts. So about $4 out of the money as of right now, going up for 90 cents on the Amex. This is opening. There were 60 cents at 90, so taking up that offer almost 4,000 times, 3,998 times. As I mentioned, this is a pre-earnings trade. They have earnings after the bell. Let's look really quickly and see. I have some of these move reports. Let's see if I have SKX on. I do, actually. They were at the time of this report, they were about 34.5, so pretty close to where they are right now. They were pricing in nearly 19%. Wow. This is actually the richest implied vol we're seeing on this report here. They passed, though. They've earned it. They've moved 16.5% on past moves. So Skechers, a mover, a bit of a stealth mover. Not one we talk about a lot here on the show, but Skechers, it's got some vol baked in. And I guess like our friend here, this 4 handles and change, This could happen, given what they're pricing in out here in the marketplace. Mr. Meatball, we got another short-term, short-duration earnings downside vol love play. What do you think about these puts in Skechers, sir? And are you a Skechers fan in general?
I'm not. For a long time, I always wore those ones that allegedly made my butt look better. But then when I found out that was just a hoax, I said, Fed is Skechers forever. And so now I've never since or will ever wear Skechers again.
Was there actually a hoax around those shoes at Skechers?
Well, the shoes, the whole thing was these shoes allegedly made your thighs and butt get in better shape while you were walking. And I think they found that to be statistically untrue. So I don't know if it was a hoax as much as it was false advertising.
This is why I love having you on the show. You're very much clued into that, the bleeding edge of the fashionista movement, shall we say.
Oh, yeah. Well, it was interesting. I said I'm going to do two things as my control to see if these Skechers are going to work. Every day I'm going to eat a whole cheese pizza, and then I'm going to walk a couple miles in these Skechers things. And lo and behold, my butt actually got bigger.
Something to be said for controlled studies. So at least you had the diligence to maintain that control. You got to keep the pizza up. You can't just do it once. You got to do it every day.
No, exactly.
So ballyhoo to you on your diligence there.
Yes.
in pizza.
But yeah, these look like they're making a bet that today's aftermarket announcement may not be as great as they're looking for, because this thing reports tonight.
Yeah, that seems to be the case. I'm going to put these in the file. I kind of like some of these little bit nearer term plays.
Yeah,
that's why earnings is kind of fun.
We
can check up on these pretty quickly and see if they're working out or not. So it's kind of nice. Sometimes you have to wait 6 months to see if a trade works out. These are much closer to home. So we'll see how these bad boys work out. I'll put these in the to be watched category. Come back to them next week, listeners, and see how our friend did here, rolling the dice in a little after hours on Skechers. So far we got one guy rolling the dice and knocking it out of the park, getting about a 3x pop for his puts. We got another guy looking to follow suit on that. He needs a big move in this bad boy for these to pay off. Remember, this is 1 day, 90 cents. These are 4 handles out of the money, listeners. So that all of that 90 cents is gone if he's wrong on this bad boy pretty quickly. So this is very much a binary option trade here. So interesting. We'll keep an eye on this one. Meanwhile, let's draw it to a close with this one. This is one of the Rock Lobster's favorite styles of trade. I can't speak to this ticker. Haven't really talked about this one before. Eventbrite. You guys know them. They are the ones you get all those tickets for. If you go to like a webinar or something like that, you get an Eventbrite link. So you guys have seen this before. Ticker symbol EB. 16.5 today, up about 20 cents on the docket here. And let's see. A year ago, they were trading. They were trading 23. And obviously their earnings time, because they popped up literally the next day to 36.5. So 13 handle swing over the course of a day. A 50% swing pretty much for this name. So a little bit of vol here in this Eventbrite name. Who'd have thunk it? Online ticketing and event management would be the volatile place that it is. This chart looks like a biotech. And then it sold off again back to about 26 and change in October. So in a span of a few months, went from 23 up to almost about nearly 40, 38, and then back down to 26. And then it kind of stayed in this 26, got to about 34 again, then kind of sold off, kind of 34 down to like 29 or 28 range or so for until about March, when it sold off again. Looks like earnings were not that good. Hit about 32.5 and promptly sold off to about 19 a couple of weeks later, over the course, not a couple of sessions later, after those earnings announcements. So big sell-off, and it kind of hung around there. Then it sold off again to 17, and now it's down to 16.5. So it's very much close to that 52-week low, which is 15.30 right now, about $1 and change north of that right now. So let's see what we got. Looks like someone deciding this far and no farther here for EB, deciding, we're at the bottom of that 52-week range. I don't think it's going to blow through it. Let's hit me some puts to the tune of the AUG 15s. Going up 3,885 times for 60 cents, right on the bid. These were 60 cents at 80 when this trade went up. This went up over there on the SIBO. This was opening. They do have earnings in this cycle. Earnings are the 7th of August. So taking advantage of the earnings to get a little bit of earnings juice on there. So 60 cents on the 15 puts, that puts them down to 14.40 on the downside here, which puts them about almost $1 below the 52-week low. Not terrible, not super maybe exciting. Mr. Meatball, does this one blow up your skirts while you're wearing your Skechers over there, sir?
This is not one that had caught my radar, but the paper pretty much looks like, hey, this is at a 52-week low, and if I can take delivery below 15, I will. And if not, I'll collect some income. So they're maybe saying the fireworks are over, not necessarily it's going to pop back, but it seems to be at least mildly bullish for the underlying.
Mildly bullish indeed. You know what? We're gonna watch this one too. Got to wait a little bit longer for this one, but I think we'll have a better sense in a few weeks of whether this bad boy is working out, whether this line is holding, or whether our friend here is going to own himself some stock at 14 and change. Meanwhile, though, it's time to keep on rolling. It's time to get some of your questions. You guys got some epic treatises. Let's get to those in the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Let's dive into your questions. Really quickly, we asked you that silly one on last show. It was Prime Day on Monday. We asked you, are you buying anything on Prime Day? Yes on Amazon, yes on other outlets, or no. And 60% of you said no. And then 40% of you said yes, but on Amazon. No love for other outlets. No going to a Walmart or a Costco or whatever to buy something, or Best Buy. Nope. You're Amazon or bust, it sounds like, in our audience, which is interesting. All right, here. Let's start off with this one. Uncle Mike, you and your collar love in SLV have been invoked by a listener. So let's get. I like this. Thomas A. Weber, PhD. We have quite the edumacated crowd here, saying, "Hi ho, SLV away." Clearly, he's a listener. He knows how we roll here. He says, "Uncle Mike." He writes it straight to you. Doesn't even forget about the rest of us. Uncle Mike, what option strategy do you suggest for SLV with a 30-day bullish outlook? The out-of-the-money options are usually cheap, but the range is tight. Is it time to ride SLV into the sunset or take SLV to the glue factory? I like this guy. I like this Thomas A. Weber, PhD. Sir, you fit right in here with the all-star panel. So, Uncle Mike, clearly a long-time listener here. He knows how we roll. What do you think? Glue factory or sunset? And how do you like to approach it, sir? I know you haven't been doing much in your 2-year collar. Maybe the 30-day a little bit more active.
Yeah, with SLV, with what's happening right now, I think if you are bullish on it, I think if you're short-term bullish like that over the course of 30 days, I think doing an in-the-money option, buying an in-the-money call would be the way to go. If you buy a 30-day, I'm just looking here on my chain. If you look at the 29 days out, you can buy an August 14 call for $1.20, and that gives you pretty much 90% leverage with only a few pennies of time value on it. So I think that if you're looking to do a levered play on SLV for that time frame, I think that would probably be the best way to go personally. In terms of my opinion on it, I'm looking at more of a long-term thing. It still needs to move a little bit more for me to make any adjustments with my collars or things like that. So I have a very wide collar going on it. So it's still, yes, it has moved, but it has not moved enough to really make it so that it's enough of it's not adjustment worthy for me. So it's not, it's starting, but not quite yet. So in terms of whether we should take it to the glue factory or whatever we want to do with it, for now, I'm just going to kind of watch it and ride that horse.
Ride that horse indeed, sir. I don't know, Mr. Colin or Mr. Rock, Mr. Uncle. I just did Uncle Mike. Or Mr. Meeple. Any of you have any thoughts here on SLV before we keep rolling?
I mean, the implied volatility is really high, so if you're going to go long call or something like that, you have to do it as a spread. Or some sort of calendar-y type of thing where you're selling expensive implied volatility in front of it. Because, that the higher you go, the higher the curvature. And so there's some opportunity to build some inexpensive spreads, but I could not in no way would I ever just go outright long a call in this thing because the implied volatility is through the roof.
Indeed. Sylvia, the metals vol all of a sudden been something to watch. Who'd have thunk that a few months ago when pretty much most metals vol was in the toilet and had stayed there for the better part of a year, if not longer. And whenever it caught a bid, it would just vanish. But yeah, metals vol is something interesting to look at again. Maybe we'll get to more of that on TWIFO in a little bit, listeners. Stay tuned here. Let's see. You guys are all over the place on your. I love it. I love the direction you guys take us in every show. We could do a whole listener show and just to see the madness that it wrought. But it's fun nonetheless. We got this is timely. This is the those Carvana puts we have here. Yanks 953 chiming in after our last show. or actually this was a week ago, I guess, because we were talking about those puts we just analyzed, the Carvana puts. Remember, we were talking about the July 60 puts, and someone gobbling up a ton of those for a week. He chimed in during the show, said, hey, I like that. He actually grabbed the AUG 60 puts for some more time instead, but he loves the play. Well, Yanks, steaks and drinks are on you, it sounds like, because these puts are looking pretty good right now. We just profiled the July puts. The guy's got about a 3-bagger on those right about now. I don't know where you got in on yours, but I'm going to guess at least 2x on these puts if you're still in them. Looking at them right now, come into the end of the show here, they're at about 560 at $6. So they're looking pretty good out here. Well done on your part. See, sometimes it pays to pay attention to the smart money. We say we don't always follow it. You got to kind of put your own spin on it. He did it to the case of giving himself a little bit more time. A week is kind of nuts, and I'm glad he kind of realized that. So it sounds like he did pretty well. Let us know, Yanks, 953, how that worked out, where you got out of it, because looks like that one, see, definitely covers the cost of listening to this show, which is free. So well done there, Mr. or Mrs. Yanks, 953. More regular listeners chiming in. We got our old good friend, J3 Dingle. He sent us the link, and it was to, oh, you know what? I don't have it here, but it was to what was it, Eric something, Swalwell, that Democratic congressman who dropped out of the presidency. He never really got much traction, and he chimed in. He says he bets it was the UVXY position. And if you remember, J3 is the one who wrote in a few months ago and said that he saw, back in May, he said he saw on Bloomberg, one of the 20-plus Democrats running for president owns UVXY for size in his portfolio. That alone should be disqualifying. Apparently, it was that same candidate because he's now out of the race. So I guess we can all breathe a sigh of relief that someone who has a size amount of a neutered vol product in his portfolio is not going to be the commander-in-chief. Because really, SPXY, UVXY, he's still slinging those. But we talked about that on our vol views recently. There is still a market for some of those, but you got to kind of know what you're getting into. And it's certainly nowhere near as appealing as it once was. I don't know, Mr. Meatball, you think owning size UVXY, should that be a disqualifier in and of itself for the presidential officer?
I believe I may have tweeted at that. I think I tweeted at Congressman Swalwell that feel free to DM me and I can explain to you how your UVXY position is working and why you should consider unwinding it.
Yes, take it off post haste.
I hope his portfolio does better than his presidential campaign. But that was probably not one of his better positions.
Not one of his better positions. Didn't exactly light up the tape there on, of course, 20-plus contenders. At this point, most of them throwing in their hat in the ring, probably just trying to raise their own profile. And I guess it works for a degree here. All right, we got, let's see, more comments here. Oh, here's a good question. Momo Rob. He says, I was wondering, do you give courses on how to trade options? Well, I personally do not, Mr. Momo Rob. I'm busy here giving all you guys this great free content here on the network all the time. So that's where I live. That's where I hang my hat. But I happen to know somebody who does. Mr. Meatball, would you know somebody by any chance who gives courses on how to trade options? Could you refer someone?
Yeah, me. So if you want to learn how to trade options, shoot me an email, marketoptionpit.com, and we'll set up a time to chat. I'd be happy to teach you how to do all this stuff.
Yes, so there you go, marketoptionpit.com, or hit up the Rock Lobster, Andrew at optionpit.com. They will take you to the dark side of options. Oh, it was Eric Swalwell, that's the one. He's the one who had all that size SPXY in his portfolio. All right, so we got some epic ones here. We'll have to find some time to work some of these in. These are good. Keep those questions coming. We love it. You guys are all over the place, and that kind of keeps us on our toes. We like it, so keep them coming. Meanwhile, we've got split wing flies. We've got epic treatises on iron condors and SPX, Greeks, you name it, all of the above. But we got to keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, a lot popping off here this week after the bell today and coming into next week. Let's go back to the hot seat. Colin, sir, what do you keep an eye on for the rest of this week into this weekend? We can even cheat and go into next week if you want for what's lighting up your radar. What are you watching in the coming week or so over there at Fidelity?
Yeah, it's. I know it's going to be a little bit of a boring answer, but it's really what I'm watching. I mean, my focus is going to be on Microsoft after the bell today. It's going to be really interesting, especially with all the focus on tech and what's going on with that little. Apparently, there's a little disagreement over in France with the taxation and whatnot. But it'll be interesting to see with them coming out with earnings. I want to see the reaction there, and then as well next week as the earnings keep rolling, it's going to see. Are these earnings really fading, and see how that impact goes. So a little bit of a boring answer, but really, that's what I'm going to be watching moving forward, as well as things that we've been kind of lately been watching is a weird movement is watching the transports, the Dow transports, and the regular Dow and how that reacts. Because interestingly enough, we've been watching that the last couple of days. Been an interesting movement out of them. So to see if that's going to continue moving forward as well.
Yeah, Microsoft's been a fascinating one to watch. I've said it before. They were for a while, about a decade, better part of a decade, they were kind of lost money, and so they were one of the best premium rights in the business because they would always price in just a little bit of juice, not a ton, but a little bit, and they would never deliver on it, so you could always bank on keeping most of what you sold. So it was a great deal. Then about a couple of years ago, they started tweaking their business a bit, changing it up, new CEO and everything, and all of a sudden they're a different beast. And sometimes they blow the doors off it anymore. So it's not quite the reliable premium right that it used to be. We'll keep an eye on it after the bell and see if they're back to the old days or if they're back to the new, trim, vigorous, vibrant Microsoft that is aggressive, shall we say, on earnings day. Uncle Mike, same question for you, sir. What is on your radar here going into the weekend?
Well, watching to see today if silver can make a new high for the year. That's one thing on the radar. Of course, watching earnings, watching Microsoft, watching also just kind of not necessarily this week, well, not this week, but wanting to see the reaction of the Fed in terms of if they follow through with this rate cut. And it's not too early to start thinking about non-farm coming up in August. So watching a lot of things, but more waiting than watching at this point.
More waiting than watching, indeed. And last but not least, Mr. Meatball, sir, what are you keeping an eye on going into the weekend?
Well, we got earnings, and more earnings, and that's what's going to drive what I'm looking at in the overall market. And notably Microsoft tonight, and currently, I believe, the biggest company in the world. So that could absolutely be a driver of kind of what's to come next week.
That could indeed. Unfortunately, that music means nothing more to come, at least from this show, listeners. But don't worry, we got you covered. If you're listening live, take a beverage break, relax. Actually, maybe we'll pipe in a little bit of. I think we'll pipe in a little bit. You think like in Softy here? I do believe we actually have a breakdown in options playbook for some earnings trades on Microsoft. So maybe we'll pipe one of those there in for you, and we'll be back in exactly 35 minutes to talk commodity, vol, options, skew, all that good stuff with the head of research over there at CME. But before we do that, let's go back around the horn. Let's go back the way we came. Let's start with Mr. Meatball. Sir, if folks are intrigued, maybe they're like our friend there who wrote in, he wants to learn himself about a little bit of their options. Where should they go? What should they do, sir?
Come visit us at optionpit.com and follow us on YouTube. Our YouTube handle is OptionPit. I give you every day at 9:15 Central. I give you my 5 minutes to think about on the day. Today I discussed how I ignored the clouds and thus I got wet.
There you go. That's that and the Skechers won't help your butt.
Well, the Skechers won't help your butt. I did a diatribe on people who stand on escalators versus people who walk on them. We've hit a bunch.
This is gold, listeners. You got to get over to Option Pit on YouTube. Make it happen. Just gold mine. Get out there. You're missing out. In fact, you should be watching it. Don't watch it right now because you're watching this, but afterwards, of course. Consume it voraciously. And get on over to optionpit.com. Sign up for some of those webinars and those courses you guys love so much. And Uncle Mike, sir, if I want someone to sit there maybe on boring days like today and watch the market for me so I don't have to, where should I go? What should I do, sir?
Well, by all means, stcharleswealth.com, and on boring days, watch the stuff that's exciting. Silver is going. That is exciting. But nonetheless, if you'd like me to watch it for you or discuss some things you may or may not need, feel free to contact me, and you can find my information on my website.
There you go. stcharleswealth.com is the place to go. And last but certainly not least, Colin, sir, you talk about what people are lighting up over there in the realm of Fidelity. If they want to kick the tires for themselves, maybe reach out to you or Trey or the Last Emperor or anybody else over there, Brian. Where should they go? What should they do, sir?
Yeah, so they could always visit us on fidelity.com/options, detailing all the services that are available, including the tools to help them with their analysis for their option trades. We also have educational resources through our website, as well as online virtual classes where they can proactively ask questions and attend those, whether it's option-based or reading charts. So at any point in time, you would like to have a discussion, whether based on an option strategy or just your trading strategy in general, don't hesitate to call Fidelity at 877-907-4429. Ask to speak with the trading strategy desk, or you can even ask for me by name. We're here to help you out in any way that we can.
Give him a call. Ask for Colin. It'll make his day, and it'll keep that Last Emperor from getting too big of a head because he's been on a lot and he's got a cool nickname. So call up, ask for Colin, and then he could rub it in the Last Emperor's face. Remember, fidelity.com/options is the place to go to kick the tires and light the fires. And on behalf of Colin and the Greasy Meatball and Uncle Mike and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for joining live, for sending in such awesome questions. You got so many here. These are great. So keep them coming. We love them. If you don't get a chance to squeeze them on this show, maybe we'll squeeze them in somewhere else. We answer all your questions, however they come in. Don't worry. But we only have a certain amount of time on this show to get to some of these epic questions. But keep them coming. Speaking of keep them coming, we'll keep some good stuff coming for you. You can listen to a little bit of Iron Condors in Microsoft around earnings for the next few minutes, and then I'll be back in exactly 30 minutes to talk some commodity vol and skew and all that other fun, good stuff on TWIFO. And otherwise, listen on the podcast. We'll see you back here tomorrow for Vol Views, and then next week for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.